Well, now joining me to talk a little further about Portugal's budget with me is Laurence Mutkin. He is head of European Fixed Income Strategy from Morgan Stanley. Thank you very much indeed for coming on the Pulse today. Just looking at Portugal, a second only to Greece in terms of its credit rating, what do bondholders and indeed potential investors need to see from this budget in order to restore a bit more confidence in Portugal?
I think they need to see a long-term outlook. I mean, the near-term question about the budget is difficult, and obviously there seems to be an element of going down to the wire on this. But it's not just about this coming year's budget, but it's about putting Portugal on a sustainable fiscal path. As for all European countries, that's what the markets need to see.
The concern, of course, is that as they cut as the taxes are raised, rather, and the deficit is cut, are we actually going to see growth also declining, or certainly staying at almost zero?
I think we are certainly going to see very weak growth as the fiscal tightening sort of bites, and that again, I'm afraid, it is a difficult balance for Portugal to strike, just as it's a difficult balance for every European country to strike.
With that, of course, the tax take goes down and it becomes even harder to repay the deficit.
Exactly. But I think, you know, it would be wrong to suggest that somehow if you get it minutely wrong, you can forecast an immediate sort of unsustainable situation. I think it moves slowly.
Now, we've seen Ireland withdraw its bond sales for the rest of this year. Portugal still has a couple to go, hasn't it? I think it's got about €2.5 billion euro that it needs to raise. Do you expect those to go relatively smoothly?
Well, I think so. As always, you know, these are other hurdles, like the budget, like all these other things. Every country faces a hurdle. But if you look at who's been buying the bonds in Portugal this year, domestic Portuguese banks have bought more bonds than the government has sold in net terms. So in a sense, for the government bond market, the Portuguese government borrowing hasn't relied on foreign investors for the last, not only this year, but the year before as well.
Right. And now the yield is relatively high, but is it high enough relative to volatility to make it a good investment? I
think for some people it isn't. If you consider Portugal as part of a sort of pan-European benchmark holding, it's a smallish part of the index. And as you say, although the yield is high, for people benchmarked against those broad indices, probably you don't need to hold Portugal in order to make sure that you are close enough to your benchmark. So for those international investors, it's not, as you say, high, but not compelling. But for domestic investors, again, for banks who can buy these bonds and repo them in the market, yeah, you know, it makes sense, especially the longer out the curve you go.
OK. Laurence Mutkin, thank you very much indeed for joining us today. Thank you.
Thank you.